Good morning, good morning. Hey, Alexander, how you doing? Hey, Tibby. Hey, Joe. How you guys doing? Johnny, what's up? That was a quiet New Year. Quiet, quiet, quiet. How are you guys? Everybody okay? How was Port Jeff? Hey, Cisco, aloha. Hey, Nate. My two favorite, one of my two of my favorite places in the world, Hawaii and Port Jeff. Completely different, but that's the beauty of it. Long Island and Hawaii are probably the most different places in the world, but amazing. Love them both. Okay, so thank you, Rasta. I wish you a profitable year as well, and everybody else. Yeah, Long Island is definitely an original, man. I miss doing business with those boys every day. That's why Steve's from Long Island. Steve's from Port Jeff. That's why we get along so much. Uh, I'm kind of an adopted Long Islander and an adopted Hawaiian as well. Oh man. Okay. Well, the good thing is that the market is performing exactly as it should. We had a sell-off on New Year's Eve, which was great. We filled that gap. Hang on, let me just get this out of the way for a sec. We uh, we filled that gap here, which was nice. Really good for the wholesalers to get clean, right, before year end. Now we still have people who are trapped short underneath, but that's okay. The major, you know, sort of object of the business was to fill that gap, and we did. Now, what we did on the open, we actually, you guys call this a gap. We gap up because we gap from the close. That's actually when the opening auction has a serious amount of buyers in it, and the sellers just lift the price prior to the open. So the market opens on a gap up from the close of the previous day. Overnight inventory is now 100% long, okay? And which is great because the wholesalers who had to buy, they had to buy everything under 69.14 on Friday, not Friday, Wednesday. Sorry, it feels like this is Monday. But everyone who got long, right, and had to hold it over that New Year's Day, they get to get rid of their product at a higher price. And that's what the night markets are for. So this is a clear case of the inventory being 100% long, which means every single trade is above the previous day's close. Now, what does that mean? That means we are having or expecting this, right? There's no outside sellers. There hasn't been an outside seller in this market, kiddo, since Mr. Trump had his Judgment Day thing. An outside seller, there could have been some outside selling here when we broke 68, 64, but it's just all inside, right? There's that inside outside seller thing is you won't have outside sellers in this market unless there's like some major catastrophic event, COVID, that kind of thing. So that's why these markets rebound the way they do, right? I did a video on it. It's on YouTube. Go check it out. There is no outside selling in this market. Um, the term outside selling, and I should probably cover this. This is a good question, right? The outside seller concept really comes into play in equities. So in a stock, right? Since it's kind of slow, we're in distribution. In a stock, say the float, right? Say the float is 100 million shares, right? And 80% of that float, which is common, is owned by institutions, right? They're long-term holders. They're your outside seller. So, the stock goes up and then say there's a accounting fraud or something like that, those people will bail and the thing will come out. Outside sellers mean when there are longer term shareholder types getting out of the market. We haven't had an outside seller there. We had some outside selling a little bit, but not in a futures market. It's the floor traders used to call it an outside seller when the order would come in like stray order, like a stray order would come in. Somebody's been holding the thing for like 2 or 3 months. It's kind of an outdated term, okay? And it's more accurate actually in equities than in futures. Okay? Cool. What does inside outside mean? Exactly that. Inside means, see, basically, Johnny, this thing that we do business in, this market, is basically think of this market as a huge used car lot, right? Um, and Cisco, I got you. I'll be right there. This whole market is basically like a big used car lot. Just imagine we have the same inventory of cars that we keep selling to people and buying back and selling to people and buying back. Right? There's no creation of product. That's why futures are a good thing to trade. An outside seller was me. Right? When when we did a deal and I had to blow off like 30 million shares in a week, I'm an outside seller because I'll knock the crap out of the stock, right? So outside sellers usually have a very low cost basis. They've been holding the product for a long time, more of an investor type, right? So it's very like you won't see it like say Apple or Microsoft or stuff like that. If one of those funds that's been holding Microsoft for the last 25 years comes out, that's an outside seller. Comes out means sell, right? So the primer of things, Cisco, right? The business reason to make trades are really simple. We really only have two business reasons to make trades. One is that there's no supply, so we're going to go long and we're going to beat the supply when the market gets higher. Or number two, there's too much supply and we have to short because we've identified a seller. So Cisco, what you should do is you should send your buddy. What I'm going to do is I'll DM you. Um, and if you go into the JJ video section, there's a bunch of stuff on cost basis and inventory. That's the first thing that your friend should learn. And if your friend's listening, you should learn cost basis and inventory. That is the most important thing in a market. Now, why I say that is because if you don't know where your inventory is priced, how can you do business? Very difficult to do business. If you don't know where the inventory is priced in a market, man, it's going to be really, really hard for you to buy and sell because you'll be just kind of like, like, you'll be buying in the wrong place and selling it and shorting in the wrong place. It happens all the time, right? Um, Hang on a sec. You can pass her that Dropbox. That's a Markets 101. And just DM me. I'll be happy to I've probably got 500 videos I've done, so let me just root through them. Not a problem. All right. Yeah. So, hey, AO, how you doing? Yeah. So right now we have it's an interesting first day of trading because there's the inventory was down here at the end of the day, right? The gap fill was 68.95 and a quarter, so we opened above the gap fill. I think there's still some people who are trapped short here, and then as we one time framed up, which means trend up, we created a few short positions. There's the first one. And there was a supply area here that we just ripped right through. So there's the first short position, second one, third one. The fourth one filled, but I left the green box there just to show you how the market is bid, right? That F low. Now, people who are joining us, they're going to look at these charts with the letters and go, what the hell are you doing? Well, the charts with the letters are basically just a half-hour candle chart. And we give each half-hour candle a letter name, right? This is Peter Stadelmeyer's work from the 80s and Jim Dalton. So the first period of trading in the morning is like, say, 9:30 to 10. We call that A period, right? Yeah, I mean, you know, I don't know if today's session will correct, right? That's the beautiful thing about trading. Now, if you are strongly biased and you're short, if you're like, okay, it's got to correct, it's got to correct, it's got to come down, right? Well, so far, we're in distribution. So what are you looking for if you're like a gun to the head short seller? You know those people who trade like they've got a gun to their head, like someone's holding a gun to their head, and if you don't trade, they're going to pull the trigger, right? So you got a poor high. So that's where the sellers started competing. So if you had shorted I period or J period usually corrects inventory lower in RTH and in Globex, right? So J period corrected inventory. We found the bid at 69.20. K period did not take out the low of J. That means the bid has moved up from 69.20 to 69.21 and a half, right? Now, because it's the first trading day of the year, and it's a little higher volume than what we usually encounter, right? The point of control was down here, right? This was the old POC, right? So that's where the inventory was here, right? The inventory was priced here, 70% of it. Now you can see the distribution as that point of control has moved up, right? So if you're shorting, and I completely understand why you'd want to be shorting because, look, there's a seller. When you're a short seller, you see, oh my God, there's a seller right there. And they're competing right under 69.26. So that's 25.75, right? Then the seller moved down here, 24.75. And now the seller is here, right? So if you were short 25, your stop would be 26, and you'd be looking to cover it here. Now, if you look at the bottom of this candle, I would not use this as a support level, but to buy, unless you're a really quick trader, right? There, you notice the candles here did not take out that candle here. Now, this is the beautiful thing about a 1-minute candle chart. The thing is, if you have, all you need is just the ability to pay attention, which is so hard in this day and age because they train us to have a 30-second attention span. And that's not fair, right? So what I'm trying to do is train you guys to exercise your brain so you can use common sense, right? And you will make money, right? Once you understand, like once I take the blindfold off, you'll never look at markets again the same way. And it's just like the Who said, won't be fooled again. Look at the bottom of those candles. See how they cannot hit that line? So the bid is here. Remember that 69.20 bid? There, that, and that are the same thing, right? So you don't need market profile. It is helpful, right? Market profile is helpful if you don't overcomplicate it, right? If you overcomplicate it, oh my God, you are going to waste years of your life, and I can tell you because I did. Because if someone had told me when I was looking at market profile, look, there's only 4 things that you really need to know, and then concentrate on the candlestick charts for execution, I probably would have saved 5 or 6 years to profitability. Because I went down the market profile thing and I watched all the videos and I just like went to every seminar that Jim and Peter put on. And they're great guys, but they don't translate this stuff to retail. So they say you need 10,000 hours. Well, people don't have 10,000 hours. They got kids and hockey practice and, they got to mow the lawn and, they've got stuff to do. So how do you trade and make money and be profitable with using common sense? Well, you look, if you're a short seller, you're looking for a seller. Now, see how that seller has moved down from here to here? So once we get down to this area here, as when we're looking for London to open, which it's going to open in what, 10 minutes, 11 minutes, right? The next period, we're going to see if we break that low. If we break 69.20, there's a good probability that the people who are long above it are using that as a stop, right? They're using that as a stop. So if that breaks, think of that as your piñata. You break that level, all of this candy is going to fall out. So the 4 things are poor high, poor low, single prints, and where the inventory is priced, right? The inventory is priced up here. That's pretty much it. Poor high, poor low, single prints, right? Everything else you can take and just throw it away, right? And also where the stops are. But that's not a market profile specific thing. That's a half-hour candle, right? There'll be people who will have their stops. If you were long here, you'd put your stop here. And if that level breaks, you'll be taken out of. That'll cause automatic sell orders, right? So that's really all you need to know for market profile. I do market profile classes. When I first started, I would do Profile 101, and I went through it all in 70% of the value area and blah, 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 blah. And nobody made any money because you couldn't trade it. It's all theory, right? How do you make it practical? So I said, okay, how we make practical is we use the market profile. This is essentially, and I don't know if anybody ever gets this reference, this is a map of the city you're in, and this is the map of the neighborhood in that city. So if you're going to do business in this neighborhood, you need to know where the buyers and where the sellers are, right? And then you need to know that, you shouldn't be buying up here if you see a poor high. You see the sellers are selling. Why would you buy that? That way you won't be sucked into buying false breakouts, right? So just focus on those three or four things, right? Poor high, poor low, single prints, where the cost basis is, where your inventory is priced, and stops. That's all you need, right? That's all you need. People are looking for this, and I mean, we went into, oh my God, we wasted so much time looking for ledges and this and that, and then, I don't know, some people use this unfinished business and all of this BS terminology, right? What is it? Unfinished auctions, and it just confuses the crap out of people, right? Yeah, market profile is, like I said, it's a map of the city, right? You need the offer when you're trading, right? And the offer you can see very clearly on a 1-minute candle chart. See how the offer, which is this red line, oops, sorry. The offer is the red line. The green line is the bid. When the offer came down here, you see the market couldn't offer underneath those candles and underneath there. It lifted. So what does that mean? In practical terms, it means the sellers sold, sold, sold. Then they saw, oh my God, there's a bunch of buyers. Think of this level as a glass door. And you look through the glass door and you see, oh, there's people lining up to buy. Let's raise price. That is not a difficult concept, right? Yeah, Johnny, cost basis, don't worry. Just keep putting in the reps, right? All you have to do, this is the thing. First, you need to train your eyes to see what's happening. Because when you look at a chart and you don't know what the business is behind the chart, it's very, very off-putting, right? It's just stuff going, and most people, oh, it's random and it's, it's manipulation and, well, no, it's none of that. It's a business. The chart is showing you the nature of the business transactions. It's a sales chart. Tonight, sales are pretty good, right? We picked up some, pretend that we went to Saks Fifth Avenue outlet and we got some really, really cheap, what were those shoes that I used to buy? They were like $600 a pair in Canada, and I could get them at the outlet store in Seattle for $99. These are these fancy dress shoes anyway. So you get them for $99, right? You fill up the car, right? And then you drive back to where your home is, and then you put them on sale for a profit. Go look at my videos, kiddo. I've done 400 videos, kiddo, on how to mark the cost basis. Right? It's real simple. I'll show you. Right? There it is right here. There's your cost basis. You look for a high, a low, and it comes back to that low. Right? There's your cost basis, and then you just double it, 2 times profit, 4 times profit. Very simple. You will second guess yourself. Okay? So there's going to be doubt, right? Most of the trading doubt comes from not having any reinforcement about what's actually really going on. That's why I do these streams twice a day, right? To reinforce the basic concepts over and over and over again. Because all it is repetition, right? Until the math guys took over and the quants took over, the best traders are street hustlers, right? The guys coming out of Ivy League schools, they go into investment banking. They don't go on the trade desks. Now they do, right? Because it's all math and, stuff like that. But it's still a business, right? Yeah, and the other problem is you guys, by the time you guys get to me, you've been through every charlatan, huckster, idiot, oh, I used to be a waiter, now I'm teaching people how to trade. Here's a picture of me in front of somebody else's Lamborghini, right? I mean, these guys, most of the guys who teach trading, and I say this with great respect, most of the guys who teach trading that I've come across, I wouldn't hire them to clean the bathrooms in my brokerage firm, much less let them on my trade desk. Right? It's like some of the stuff that comes out of their mouth. Oh my God. And the unfortunate thing is people have no frame of reference. Now, this is why we have built this AI, right? Our trading coach AI. And if you come into our room, I don't know if Steve's still running the promo, but we have this AI that we have trained from good sources, right? And our trading room, the tradingsyndicate.org, is honestly, you won't find this coming any cheaper, right? You will not get better information cheaper and better help in your trading, right? It's just, now, people who are just joining us on YouTube, I've been doing this for 34 years. This will be my 35th. And, I've taken 200 companies public and I've been the executing trader for the smart money. The smart money, if people don't know what smart money is, the smart money are the guys who are, in the private planes, on the yachts, and you bought their stock at $5. They bought it at half a penny. They sold it to you at $5. Then it went to 3 or 2 or nothing, and they're gone. They're smart. They distributed that stock to you, right? I have been the executing trader for smart money for 34 years. So I try and teach you guys smart money concepts, right? Now, as we get up, see there were bids at 20. When we come up to that 23 and change where that first white line is, let's see if they sell into it, right? Why would there be a seller there? Well, because they sold there 1, 2, 3 times before, right? You got to remember, these people have size, right? They're size participants in the market, and their job is to distribute their inventory, right? It's a bit slow right now. We're in distribution. We are in a balance like. So if you wanted to redraw, if you had just come in and looked at this, you'd go, oh, there's a balance zone right here, JJ, right here. What is a balance zone? A balance zone is a cost basis. This is a distribution cost basis. So they stop selling here, they initiate here, and they will let you guys bounce around between them all night as long as you keep coming. Now, if they run out of those, if those buyers at 69.20 start dropping their buy orders, the wholesale sellers will sell the market underneath 19. But for now, they don't have to put it on sale at a deep discount, right? So, yeah. Hey, Juan, ¿qué pasa? Right? Upper stops, lower stops, and it's just banging around in between. Yes, yes. There is always dumb money in a market, and there's always smart money in a market. And thank God for the dumb money, because if there were no dumb money, we would not be able to make any money. Right? I am not a guru, right? I am an old eye gouger from Vancouver who's probably like, how McDonald's used to have billions and billions? That's me. I've sold billions and billions of dollars and shares into these markets for decades, right? On behalf of the people who take companies public. Now, London is opening. London, look, see London opened? It went down right to those single prints where they were. Even though they're filled, there's still a bid there. You see that? Right? The bid is still there. So London opened, went down one tick. London usually likes to go get some cheap inventory, but nothing for sale. Right? Oh yeah, hey, look, man, look at Billy Wong. Bill Wong lost $30 billion in a week. He was trained by Julian Robertson, one of the smartest guys on the street. The original hedge fund guy. He was a tiger cub. Billy Wong went to 10 or 15 different banks and borrowed money to the tune of $30 billion, and the banks didn't know the other ones were lending him money. He's going to jail. But he was supposedly smart money. He was Kathy Wood's mentor. Right? So there are people. The thing is, the problem is, when smart money guys blow up and become dumb money, right? So what do you, if you're a hedge fund manager and you blow up your fund, what happens? You take a year off, you go to France with your wife, get a tan, drink some nice wine, eat some good food, come back after a year, and they'll start raising money again and start a new fund under a different name. When you guys blow up your account, you lose your house. That's the difference, right? It's a very different business. Retail trading, and when retail traders tried to trade like fund managers, that's dangerous, right? Or they try and trade like big prop traders, because those guys have massive amounts of leverage. And if you made money before, if you screw up, they'll give you another chance, right? Look at Brian Hunter. What did he lose? Like $11 billion running a short squeeze on natural gas? So we saw the sellers here lift their offer up to this level. Let's see where they sell into it. You're wrong. Sorry, brother. You're wrong. How could you think that? You don't even work in the business. You have no idea what you're talking about, not to be rude. I've seen it happen. I've been doing this 34 years. I know people who have blown up funds and started funds. Do you? Right? Sorry to be a bastard, but you don't know what you're talking about, right? There's an ocean of money out there, right? Right? It's sorry, when I see comments like that, I got to tell you, I can't tell you that you're right when you're wrong. Sorry, right? Brian Hunter's got a new fund. They all have funds, right? Bill Wong, he perpetrated a fraud. So it wasn't just an honest mistake and he traded himself into a hole. He lied to his creditors, so they're throwing him in jail, right? So he's not going to have a new fund. But I guarantee you that most fund managers who lose money, they come back unless they've done something illegal, right? And then they get arrested. You can't come back from that, right? Yeah, you know, Srin, you should maybe read the Wall Street Journal every once in a while. Don't read Twitter. Read the Wall Street Journal. Read Bloomberg. You might learn something. Keep your eyes open, right? That's why you have two ears and one mouth, right? Right? When I tell you something, I'm trying to help you, right? Because you don't know what you're doing. You have no clue. So listen. Keep it simple. Just listen, man. But that's not the important thing. The important thing is we want you to trade like smart money, right? Right now, I don't see an edge to trade off of, right? I see London moving higher and higher. As we get to 69.24 and 3/4, can we take out that level? Is there enough buying in the market where the sellers will raise price to 25? Watch. Here we go. See how they sold before 24 and a half, 24 and 3/4, right? So you knew that there was going to be a seller. So what's the takeaway? What's the practical? Had you been long here, right? Had you been long here and you knew that there was a seller here and a seller here, right? You'd be selling alongside that seller. So if you're long 21, you'd be selling into those 24s, right? You'd put your sell orders here and here, just under these levels and here. So say you're long five contracts. So you sell one or two, you sell one here, sell two here, right? And your fifth, if you want to hold that runner, right? You put that sell order just right underneath where they sell. You front run where the sellers are, right? Very simple, right? It's practical. Got to be practical. See, they hit that level, they sold into it, right? See, look, you will get more information off a 1 minute candle chart if you can pay attention and not be distracted. So if I was long 22 with a 21 stop, right? I had sold some at 23 and a half and some at 24 1/4. Now I've booked profit. So I've got one contract left. If it doesn't go up over 25, I don't care. I'll sell it here and be out of the trade. Why? What are the market conditions? Well, it's slow and choppy. right? So are you looking for a 30-point trade? No. So say you had gone long on 5 contracts, right? And if you rough out maybe 3 points average on 5 contracts. Now people are like, "Oh, 3 points is not a lot, JJ. You know, I, you know, I got to buy my $500,000 watch today, right?" Well, 3 points on one contract is $150. Multiply that by 5, folks, right? You guys aren't making that kind of money, right? I know you're not, right? If you do this and you learn how to do this using the micro, right, you are going to have a distinct advantage to all the other people who are trying to make 4 grand a day and losing all their money. Right? You make $450 a day, which doesn't seem like a lot, but when you multiply that by 20 days, that's 9 grand a month in extra income. How many of you are making $9,000 a month trading? Because you're all looking for huge gains without the skill to trade huge gains. It'll come, right? I've got guys who make $50,000, $70,000 in a day, but you don't start making 50 grand a day. That is completely delusional. Learn how to do this using the micro. We'll teach you basic, simple, practical concepts. And then as your skill develops, like anything else, you need skill. Once your skill develops and you learn how to manage trades and positions, right? Yeah, $400 times 255 trading days a year is 100 grand. And I know you guys aren't making 100 grand a year trading, right? Because everybody's looking for that 30-point move and breakouts and blah, 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 and delta liquidity, Hoover sweeps, and frickin' this pattern and that pattern. See, the sellers are seeing buyers, so they're raising price. It's a market. It's a market. Don't forget it's a market. Make sure you get paid. If you're long 22, you have put out capital to buy inventory. So you must turn that inventory back into cash. Otherwise, you're not a business person, you're an investor. Learn how to take profits quickly because it will teach you how to manage yourself and understand how price action works when you want to hold trades longer. Yeah, social media is good, right? But there's a lot of bad information out there. Holy heavens. You know, the problem is trading education is not, there's no regulation, right? Trading is regulated, CFTC, SEC, right? But trading education is not regulated, so any idiot can come along and say, "Oh, I'm going to teach you how to trade. Give me 10 grand." And I've seen people, they charging thousands and thousands of dollars, right? My mentoring program is 3 grand, and I mentor you for life, right? And that's every day if you can handle it, right? So, and that's not going to be around for long. I'll be I will be increasing prices in mentoring soon. But for now, right, the way I see it is if I take someone on and I take their money, they're going to be profitable. Even if I have to haunt them. So there we go, looking for 25 3/4. We're almost there. We're one tick away. Now there's a poor low, so we know there's competitive selling. I mean, poor high, there's competitive selling there. If we break that poor high, the next structural stop is up here at 35 and a half. So what kind of sell orders are waiting for us up here? I don't know. That's why I don't breakout trade, right? I'm a trader who buys my inventory and then I sell into strength, right? Breakout trades are really for suckers, right? Because they get excited, the price is going up. Smart money is long here, right? And long lower, and they'll use that breakout to sell into, right? Breakouts create buyers when they're to the upside, right? And as the buyers come in, you see, look, those stops are getting taken. Those are automatic buy orders. People who were short had their stop 25 and a half. Those orders are getting executed. You can see them being executed here, right? And when you see that, you know, okay, now, because it's the first trading day of the year, I'm expecting a little bit more to the upside, right? Where, I don't know, right? But if I was long product here, and this is where the inventory is priced, right? If I was long 22, 23, 24, I would be selling this at all. Bookmap is useless as tits on a bowl. Excuse my language. It's absolutely useless. No size trader will ever show you their hand in an order book. Because if you think that size traders are just going around telling you that, where their orders are, I've got some oceanfront property in Saskatchewan to sell you. Cheap. It's all a scam. All of these things, these people know that you guys don't know anything, so they try and make up crap and sell you software. Right? It's completely useless. None of those things existed 10 years ago, 20 years ago. How did people trade? People have been trading for hundreds of years. Before the invention of the microchip. How did they trade? If I just gave you a time and sales, would you be able to trade? Don't waste your money. I think it's Alexis. Don't waste your money on that stuff. Don't waste your time. Because Bookmap's not going to tell you where to take the trade, where to put your stop, and where to look for your profits. A candle chart will, right? You got to remember, have you guys ever heard of a saying? I know most people here are young, right? The tape never lies. Older people will understand. They used to call this the ticker tape or the ticker, right? Or the time and sales. It never lies. Those are transacted. Those are business transactions that are actually happened. Johnny came in to buy. I sold him a contract. That is transacted volume. It goes on the record. An order book is an expression of interest where people put their bids and offers in. That is untransacted volume. Don't ever trust untransacted volume. I've been manipulating level 2 and order books for decades. We will paint a picture, you guys will fall for it, we'll nail you. And like they say in Billions, and that's when you shank them, right? Just use a simple 1-minute chart, a little bit of common sense, learn how to pay attention for more than 30 seconds, you'll be on your way. Hairdresser? Okay, Moran. Yeah, exactly. I could be a hairdresser unregulated. Oh my God. That'd be pretty brutal. Screwing up people's hair. Right. Yeah. Right. Just learn how to pay attention. Right. Yeah, I'm a hairdresser. Yeah. Yes, I know. I have an ex-girlfriend who had a really bad hairdo once. Guy totally butchered her hair. It's horrible. Uh, hey, Raj, what's up? Things getting back to normal? You must have a good New Year's. Lots of obscure sports. See, look, there's a seller here. If you're using a 1 minute candle chart, you can see clear as the nose on your face that there's a seller at 28 and 3/4. Darts. I don't know how you guys watch darts on TV. That just blows me away. All right. And if you are shorting, where are you going to look for a cover? Just here at 26. Because when we took that stop, right, this is where market structure is important. People had their stops here. When they got taken, the people who don't use hard stops will have buy orders here. So if you're short here and it comes down here, you look for your cover in this area. See, the way they take advantage of us, folks, is because they've trained us with these smartphones to have a 20, 10-second attention span. Swipe, 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 swipe. So when you sit down at a computer and you're watching these screens, it's very hard to pay attention. So what you do is you do a little exercise. Take your phone, put it in another room, right? Close all your windows, put a 1 minute chart on the screen, draw your lines, and watch. Watch the offer move up and down and up and down. I guarantee you after about a minute your head will hurt. It happens for everyone, right? Right. So learn how to, like, it's like working out, right? You know, you want to work out your attention span so you are able to concentrate. I can sit and watch these charts for hours because my life depended on it, right? Because listen, if you miss a trade and you know, you tell your client you were scrolling on TikTok, that's the last trade you'll ever get from them. Right? Let's see. Can we take out 28 and 3/4? Look. The other thing is when a market goes and it goes from an accumulation to a distribution, you don't want to trade that. You want to try and catch this move, right? And if the distribution is a big zone, you can trade it back and forth. But if it's really small and choppy, right? The other thing about candles, candles will tell you the nature of the business going on at the time, right? Small candles, slow business. Big candles, bigger orders. That's all it is. But nobody ever tells you in common sense, practical knowledge what's going on. We try and change that. So we don't try and, you know, when you come into our trading room and you attend our seminars and things like that, we don't try and BS you and say, oh, it's this and that, and it's an upside down Aunt Jemima Delta liquidity sweep, right? We don't. There's none of that bullshit. We tell you the sell's here, the bids are here. Let's do some business. Shorts are trapped, right, Moran? So the people who were shorting 27, 28, they're like, oh crap, they went to cover, big candle, right? Trading is very simple. It's also very difficult. That's the conundrum, right? Trading is really simple, but damn, the execution's hard. So we teach you how to keep your analysis simple so you can focus on execution. Because you're going to be focusing on execution your entire trading life because this frickin' market changes on a dime, right? The markets change, the order flow changes, and order flow, and people, you know, I saw this guy on Twitter this morning. I didn't say anything, but, you know, bless him. Well, I'm going to be teaching order flow. It's like, order flow is a marketing term, okay? There's no such thing as order flow software. A 1 minute candle chart is order flow. is showing you, basically it's showing you the orders that are coming into a market and where they're transacting. Okay? There's no such thing as order flow software. Okay? Don't fall for it. It's all marketing. It's like when they were selling turbo cologne in the 80s, right? Everything was turbo, turbo, turbo. So here's the backfill. Let's see if we get some bids around 26, 26 and a half, right? Order flow is the biggest BS marketing scheme you'll ever see. Yep. Timing and execution, and you got to work on your execution. It's like, it's like trying to jump your motorcycle over, a car or something like that. It's going to take a few times. Right? You're not going to stick the landing, right? You have to practice, right? Order flow software. I was like, oh yeah, really? Yeah, bless that clown. Oh, oh, it's hilarious. Let's see. Did we find bids at 26 and a half? Yeah, well, there's a little bid there. So still no big correction, right? What we need, let me zoom out a little bit. No, I use Sierra Chart. Um, Jim used to own Window Trader, or used to be a partner in Window Trader. I really love the people at Window Trader. They are the sweetest people there in Washington State, but their software is insanely overpriced. Um, Sierra Chart's beautiful, and it never crashes. Unfortunately, Window Trader used to crash on me every time the market opened. And when I was still in Canada, it was like I was paying like $600 a month for Window Trader for equities and all that. Like, and for like 100, I get that for everything in Sierra, and Sierra never crashes, right? But don't get me wrong, the people who run that company are the sweetest, nicest people you'll meet. They're really, really nice. Their product is just way overpriced, right? The only thing about Window Trader that's good is that the interface is easy to use. Sierra Chart was developed in the 80s, and I spoke to the guys who developed it. Nice people, really good guys. The guy developed it for his father who was trading in his garage. That's why it looks like it's from 1986, because it is from 1986. But I have been using Sierra since 2012, and I don't get paid by them or anything. Um, I've only had it crash once, and that's when I tried to load a Bitcoin chart, and I put in too many ticks, and it was actually the data feed that crashed Sierra Trader. It wasn't actually the software itself, right? So Sierra Chart takes a while to get used, but there's other profile softwares out there by now. I haven't really looked. But even if you don't have market profile, right, you can use the concepts from market profile. Just use a half-hour candlestick chart, right? And that'll tell you where the bigger stops are. It'll show you the map, right? And then you just, for your execution, use the 1 minute candle, right? So what do I mean by that? See, market profile is very hard to execute off of, but it tells you where you are in the city, right? For what we call situational awareness. So how do you execute off a candle chart? So for example, if when the market came underneath 26 and a quarter, and I told you it would, right? I told you where it would come to, 26. Say we bought 27. You'd put your stop here, and then you'd put your sell orders here, right? So that's very practical, right? This is a look below and fail of 69.26 and a quarter. What does that mean? It means the sell orders that took the market under 26 and a quarter are now completed. The market rotates higher to find sellers at a higher price, as markets will do. So that's when you buy your inventory, and now you got a great place to put your structural stop, right? So the business reason of the trade is there's no supply. Now you are the supply and you sell into it. So you buy 27, you sell 29, you make your 2 points, you go have a coffee. Very simple. The execution will take you some time to learn. You're going to screw it up a bunch of times. That's why you practice on the sim to learn the software so you know you're fast, right? So when I'm doing my one-on-one coaching, what I do with people is I get them to put orders in the sim just like you would if you were sitting on my trade desk, right? I'll go, okay, 69.27 bid, 26 half stop. And by the time I'm finished saying that, you should have the orders in. If you're fumbling around, you need to work on it. If I go 69, I go 28 bid, 27 stop. By the time I'm finished my sentence, you should have those orders in. You don't want to be a slow trader. A slow trader is a dead trader. Same as if you are a desperate trader, right? You need to develop your skill. So this is a common thing in markets. Markets will go up. That creates demand. The demand runs out. They go back. That's why we call it backfilling. And then they'll fill in the demand here, 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 and here. People who put orders in, we fill them. When we find the large buyers, which is, oh, what a cost, what a coincidence, right at cost basis, we stop selling. There you go, right? So if you were look below and fail, say you were long 27, 27 and a half, you're selling the 29 and a halves. Very simple, very simple. You just have to practice it over and over again. And you don't hold on to trades. If you know that there's a seller here, why would you hold it looking for here? That's hoping and wishing and praying. This is legitimate business. This is gambling, right? Make your money. Learn how to take money out of the market. The other thing, folks, is if you are a new trader and you start getting profitable, take your money out of there every week. Get used to being paid because then you will be accustomed to getting paid, right? Once you get used to being paid, you're not going to want to screw that up. Never try and grow your account when you're a new trader. It is a recipe for disaster because you'll get overzealous and your ego will outtrade your skill, right? It happens every time. Your ego will outtrade your skill, right? It'll take over. Get paid. Keep the money. It's one thing to make it, the other is to keep it. When you have a win, take it, right? All right. No single prints. That's it for me today, folks. We'll see you at 9 a.m. I do these every day. 7:30 in the morning UK time, 9 a.m. Eastern time. Come see us at thetradingsyndicate.org. Make your 2026 profitable. We'll get you there, right? You may not like how we do it, but we'll get you there. All right? Thanks, everyone. We'll see you in a few hours. Stay out of trouble. And as usual, do not take candy from strange market makers. Bye for now.